Do you think you might regret that you didn't buy a house today, 10 years from now? I think you might, and here's why. Rent increase versus mortgage decrease, okay? Let me tell you how I mean. The concept is more important than the numbers. So if you're renting right now in Los Angeles, okay, or wherever you are for that matter, rents are pretty high. In Los Angeles County in particular, a 3-bedroom, 2-bath could rent for $4,000 per month, okay? So even if that rent were to go up by 4% every 2 years, the beginning of year 3, you're at 4,160. Year 5, 3,226. Year 7, 4,499. Year 9, 4,679. Year 11, 4,866. And we're not getting any younger. Now, on the flip side of that, your mortgage, if you bought a property today, $800,000 house at a 6.75% interest rate, principal, interest, taxes, insurance at 3% down, you'd be at about $6,300. $6,300. And of course, why not save $2,300 renting, right? Now, the thing becomes that even though you have an interest rate at 6.75, it does not have to stay there, right? Interest rates go up and down, and they're slated to start to come down as we recover from these economic turmoil, inflation, what have you. So let's just say hypothetically, year 5 years from now, rates could go down quicker than this by 5 years. But 5 years from now, you go from a 6.75% interest rate to a 5.75% interest rate. Your payment on a loan amount that has now been paid down from $800,000 to $700,000 is $5,397. That's at year 5. Hypothetically, of course, but just to give you an example. 5 more years go by and you're paying on your mortgage and rates go down to 4.75%. And your payment goes from $5,397 to $4,351. So at year 10, you're going to be paying less for a mortgage than you would be in rent. Now, of course, I'd assume rents continue to increase, but here's the thing, guys. Interest rates are slated to come down. As rates come down, the prices start to go up. So the houses that you're seeing today on the market that you might think cost a lot today, as rates start to be decreased, those purchase prices are going to go up even further, okay? So you can buy in to a house today, and of course it's going to take time of you being able to make that payment, but eventually you'll end up in a situation where you will be more happy that you purchased that house than if you continue to rent, okay? Not to mention, if your rent increases continue to happen like this, and as we get older, our income does start to come down. This is where a lot of people find themselves, is that they did not buy, rents have started to go up and outpace their income, and unfortunately, that's where homelessness starts to become a really big issue. So I'm trying to help you guys not just purchase a house, but also think about where you'll be 10 years from now, 20 years from now, and hopefully 30 years from now. You won't even have a mortgage, so you can retire comfortably. Carl Delane Fiesta, the Mortgage Fiesta, here giving you guys some tips on how your rent can go up, but your mortgage can go down. Talk to you soon.